Good morning, ladies and gentlemen. My name is Greg McCloskey from ForexLive.com. Today's date is October 19th, 2022. This is the morning Forex technical report. I'm going to take a look at some of the major currency pairs and look at their technicals that are driving them. Give it a bias, maybe some risk levels, and also look at targets for those currency pairs. So let's get started. We'll start with the euro versus US dollar. We are seeing a move higher in the US dollar today, and that has the pairs like the euro versus US dollar, that's pound versus US dollar, moving lower in trading here today. Of course, they have their own little stories as well. In the UK, we have the the problems from a political perspective pressuring that currency pair. Also, their inflation numbers came in at higher than expected at 10.1% versus 10.0% year on year. But let's take a look at the technicals, focus on the technicals. We'll start with the euro versus US dollar. And what we see in trading here today is that the price highs from yesterday and early in the Asian session moved into this swing area. This swing area actually goes back a ways all the way through here and then reestablishes resistance in the through this area right here, and also right here we found some sellers yesterday and again today in that region. It was above the 61.8% retracement of the October trading range as well, but could not sustain the momentum above those levels. And yesterday we had an up and down trading day that found support near this swing area through here. You can see a number of swing high, and then another high, and we broke above that level in trading on Monday, and stayed above that level on Tuesday in the up and down trading session. Today is more trending to the downside, as you can see, with the Asian session starting to move to the downside, then move back below the 50% retracement level. That's also in this swing area through here, moving below that level in this swing area. And then the 100-hour moving average at 0.97919 has pushed the price down to the 200-hour moving average at 0.9755. So we are trading in between the 100 and 200-hour moving average. That's more of a neutral trading area here. The sellers take some control back below the 100-hour moving average. The buyers take some control against the 200-hour moving average. So there's a battle going on between the 100 and the 200-hour moving average, and that's going to be resolved at some point with either a move back to the upside that may gets above the 50% retracement, 61.8 in the other upper region right here, or we move below and we start to take away move toward these targets on the downside, which include the low end of this swing area at 0.9733, the 0.97078 level. That was just our low price from last Friday's trade, and then we start to look toward this swing area down through here. Number of swing lows and highs in between 0.9662 and 83 on the top side here. So those are the targets on the top side. For now, we are neutral in between these two moving average levels, and we'll see how that is resolved going forward in trading here today. So pick your poison. You like to buy a dip, then buy against a 200-hour moving average. Put your stop below the level. If you like to sell resistance, put your sell level against the 100-hour moving average and a stop above that level. So let's next take a look at the dollar versus yen. As you can see, we moved to yet another new high, ticking closer and closer to the 150 level, reached a high of 149.727. We're currently trading at 142.725. Might be a little higher here. Anyway, trading near the highs out here for the dollar versus yen. Actually, 149.77. It looks like the high price here in trading here today. Taking a look at this hourly chart, I put a new trend line connecting these highs right here. Swing high, swing high, swing high. And we moved above that level. So we're accelerating even more to the upside here. Although, the gains are somewhat limited because of concerns about, perhaps some intervention. But certainly the gains are higher. I think we're in the 11th day in a row that this pair has moved higher, going from a level of 143 to a level of 143.50 to a level of 149.70. So that's what, 620 or so pips to the upside from the low to the high over 11 straight days of gains here for this currency pair. What we do know is that the upside is at the highest level going back to 1990. What we know on the downside is that this trend line could potentially be a level that we can define risk at, or define a short-term bias. Short-term bias. Okay, so if we move back below this trend line, it doesn't necessarily say that the high is in place, but it says, well, maybe some short-term selling can take place at 149.58. Until then, that level comes in at 149.58. Until then, are the buyers in control? Yes. Are the sellers anywhere in control? No, they are not. They still remain in trouble. Taking a look at the 5-minute chart, I guess we get something very similar to that. I drew channel trend lines in here yesterday off the 5-minute chart to kind of see where we stand in a picture, and it looks like that trend line comes around the 58 level as well. The 100 bar moving average here, we traded above and below these moving averages through the Asian session in the sideways market, but then reestablished the 100 bar moving average as support. So getting below that trend line, getting below the trend line on the hourly chart, getting below the 100 bar moving average on the 5-minute chart is also a requirement for this currency pair. Let's take a look at the sterling versus US dollar next. And like the euro versus US dollar, similar move below the 100-hour moving average has tilted the bias back to the downside. We remain above the lower 200-hour moving average. However, at 1.1181, that would be our next target on the downside, or one of the targets, I guess. This level right here at 1.12109 is doing a pretty good job of holding support ahead of that. Swing lows, this whole swing area here. You can see the number of different times that the market has come in that level, including basing on Monday here and moving higher. So we need to get below this level right here, and then the 200-hour moving average to increase the bearish bias for the sterling versus US dollar. Looks something like that. On the top side, obviously the 100-hour moving average after breaking is holding resistance through here, and that's going to be a level that we need to get above and through if the buyers are to take more control. So like the euro versus US dollar, the pair is in between these two moving averages, and between the two moving averages, and also between this support level 112.09, and we're going to need to get either through on the downside or through on the upside in order to push the price in one direction or the other. So pick your poison. Do you not like the pound versus US dollar because of all the situation going on in there? Or do you not like the US or like the not like the US dollar, and or want to buy a dip in the pound and see the price move higher? That's up to you, but certainly the bias is to the downside here today, but with work to do from a technical perspective. So there you have it. Look at the three of the major currency pairs as we enter the trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye.